We're fixing it.
Let's stay on retail here. We're going to go to Tapestry, out with a beat on earnings in its latest quarter. However, missing revenue estimates as the luxury retailer saw a revenue decline in Greater China due to COVID-related disruptions. Of course, this is the brand that owns Coach, Kate Spade, and Stuart Weitzman. A decent quarter. You had Coach sales up 2% year over year, Kate Spade up 1%. That Stuart Weitzman continues to be a problem area, I would argue, for this company. Sales down 15%. I'm not so sure why. I mean, the stores look beautiful. The product is beautiful. It continues to be a little pricey.
Maybe that's the problem. I don't know, but all of their brands are relatively pricey.
Yeah, and also raising the dividend here. Look, the quarter from Tapestry checked a lot of boxes. Margins were okay. That held up pretty well. If anything, like we mentioned in the intro, China getting impacted because of the COVID lockdowns. But all in all, in a environment, a very promotional environment for retail, Tapestry was okay.
Well, speaking of a promotional environment, the adjusted gross margin in the quarter, 71.7%, which is ahead of estimates.
Considering inflation, promotions, this company's driving over 70% margin. I mean, that is huge.
It's pretty incredible. Inventory did rise 35% year over year, and we've been watching that trend continue of these big inventory builds at retailers. One more thing, though, that is not very positive for Tapestry is the full year forecast. Even with that big gross margin number, even with the beat on earnings per share in the last quarter, the full year earnings per share forecast is below estimates, $3.80 to $3.90. $3.95 is what analysts had been looking for. So interesting here that they seem to be performing on the bottom line, but that doesn't feed through to the full year for some reason.
Yeah, I think that's just more a function of Tapestry CEO Joanne Crevice-Arent, who I think wanted to come out here with a realistic set of financial numbers that she can come out, but she's gained a lot of street cred on Wall Street. She's been consistently beating earning estimates, driving a major turnaround of this brand, really data-driven, not putting terrible-looking products in these Coach and Kate Spade stores, doing things right. So I wouldn't be surprised if some of these reports come in better than expected, barring a massive economic slowdown. Friend of the show, Simeon Siegel, I guess catching a little bit of your vibe, Julie, reiterating market perform quickly on Tapestry, noting the quarter is just relatively in line.
Yeah, and I'm looking at some of the headlines out from the conference call, too. The company says that in the first quarter, it will see a 15% revenue decline in Greater China. So speaking to what you were talking about, that even as there is some opening there going on, there's still some constrained spending, and we still do see shutdowns in various areas. So that could be...
Yeah, I'm trying to also figure out the read-through for when Macy's. So we had really shockingly bad quarter from Macy's. Coach was good. They, of course, sell into Macy's stores. It's tough. It was a tough quarter in apparel. Target called it out, too. It's, unclear what Macy's will report, but the stock was under pressure here in the pre-market.
Yeah, and you referred earlier to people coming back out again and buying clothing. That really does seem to be slowing down, though, as more of they bought the clothing.
Yeah.
Now they're doing the vacations.
I don't need any more jeans.
Yeah.
I don't need any more. I'm still cutting stuff out.
Have you gotten your suit yet? Your new suit yet?
Don't even go there. Oh,
I'm
4 weeks into getting a suit from Suit Supply. I mean, just the process is ridiculous.
All right, well, we'll dig into that another time.